Now friends, come to this particular question. In this particular question, first of all, it's a partnership firm engaged in the business of running some hotel, competent authority. All these adjustments have been given. Compute the income chargeable to tax and give reasons in brief, giving treatment of each of the items. Now, if you will go to all these items, all these adjustments in this particular question, nowhere anything about partner, interest or partner, remuneration, nothing has been given to us. No data. For example, if you will see that this is a partnership firm, how many partners? No data. Working partner? No data. Whether it is authorized by the partnership date? No data. How much is actual salary remuneration? No data. How much interest? No data. Nothing is printed in the question. And some students, because this is also one of the old examination question, some students always ask, sir, the partnership firm computation, but that partners data is not given. So what to do? That way the students will ask. If data is not given, forget it here. Don't do section 40B adjustment. Write a note that the partners are not working partner, or say that 40B related data not given. So partners interest remuneration not to be allowed. Finish. Don't confuse yourself. Don't confuse that if there is a partnership firm, then always there should be an adjustment. Otherwise, if you will see here, if you look at this, because I told you partnership firm is just the extension, because section 40B itself is a business income section. So in fact, it is a more of a business income computation only. In fact, it is not a separate chapter, but I make it as a separate chapter for better understanding purpose. So in the given case, one thing is concluded that because in the question, nothing about 40B has been given, forget about 40B adjustment, finish. So just do business income computation. That means any specific data which was with respect to the partnership firm, which normally should be seen, because you're asking a question on a partnership firm, then you partners remuneration and this and that, because that is the heart of this particular chapter, but nothing is given. So don't confuse yourself. So ultimately, friends, again, this particular question is purely a business income computation. Finish. And majority of the adjustment you can easily do it by yourself, but let me just do it very quickly. So profit is per P&L 200, so I will start with 200. To this I will do all the LLS adjustment. Point number A. Okay. Net profit arrived after charging of the following. Okay. Now depreciation on hotel building 500 lakhs was charged, treating the same as plant and machinery. So you are treated building as a plant and machinery. Now that is not permitted. So plant and machinery is 15%, building is 10%. So just change the depreciation, because you might have charged the higher depreciation. So 500 into 10% is the correct way. 500 into 15%, which you should have charged. Sorry, which you have actually charged. So the difference I will have to add it back to the computation. So difference, you can say 5% of 500. That means add 25, or you can show the breakup also, add less. Okay. Point number B. Expense of 1 lakh incurred for the purpose of promotion of family planning pertaining to its employees. Now this promotion of family planning deduction for the promotion is given only to the corporate entity. This is a partnership firm, and therefore this particular 1 lakh is not allowed as a reduction. So you have to add 1 lakh. Okay. Point number C. Payment of 50,000. The payment of the 50,000 for advertisement purposes, souvenir purposes of Bharatiya Janata Party, the political party. So add 50,000. Okay. However, this 50,000 you can get the deduction when it comes to chapter 6A, but we are just doing business computation, so just forget it. Okay. Now if it is given in cash, then it cannot be. I think cash and all that data not given, so that's okay. Point number D. Compensation of 1 lakh paid to the supplier for automatic kitchen appliance because of termination of contract after the receipt of 50% of the appliances. So 1 lakh has been paid for the termination of the contract, but this contract for the automatic kitchen appliances, see, what is your business? You are running hotels. So in the hotels, this automatic kitchen appliance is going to be a capital asset. Okay, so you have terminated some contract, that is okay, but it was a capital contract, and that is the reason this 1 lakh rupees, which is for the termination of a capital contract, will become a capital loss, and therefore add 1 lakh rupees. Okay, not allowable. Point number E, wines and liquor imported last year for 20 lakhs were available in stock till 1st April. For 5 lakhs were confiscated by the government and therefore it was written off. So liquor and wine has been confiscated by government because of some rules only they might have confiscated. Okay. However, this is in the business of running an hotel. So for a hotel, these particular wines and liquors and all that, it is like your, what should I say, stock in trade, something like a stock in trade. It is not a capital asset to you. So there is a loss, no doubt about it, that. And this loss is in the course of the business and you have lost that particular money. Okay. So ultimately, if you will see, this particular is some stock adjustment that you have already done it. We will not require any adjustment to be done because it is anyway the allowable item. And if you are showing it as a opening closing stock, then opening closing stock valuation itself will take care of everything. So we don't require to do any adjustments whatsoever because this transaction is in ordinary course of the business. Now only one caveat I want to tell you, and the caveat is that supposing if this was an illegal activity, see, they have confiscated, but reason why they have confiscated that not given. That means if you are doing some illegal acts and if there was a confiscation, then I'll have a double mind. But otherwise, I will say that it is ordinary business transaction and go ahead. Okay. Point number F. Okay. Now, expense of 20 lakhs incurred on replacement of carpets in floor, lounge and bar. Now here, replacement of this particular carpets will also be an ordinary business transaction because they don't have that great life. Okay. And for the hotel, this is a ordinary business transaction. So this is again ordinary business transaction. So you require no adjustments because it is anyway debited credited. Since it is debited credited, so you don't require any greater adjustments whatsoever. Now, point number 2, out of the amount credited to reserve under this particular section, so 80 HSD was some old provisions, and for that the reserve creation and utilization, all that was there. But we'll just read the question data and give the answer. 15 lakhs could not be utilized for the purpose of this particular clause. Is multiple time limit for the reserve is expired. So since time limit for the reserve is already expired, add 15. Okay, straight away. Then next, the amount of rupees 4 lakhs equal to UK pound 5,000 was remitted and paid to a travel agent resident in UK as commission for booking international tourists in the hotel. TDS was not deducted out of such payments. Now, this particular is a very, very vital point of the international taxation. But I will make the hardcore basic things very clear. See, this amount of rupees 4 lakhs to a travel agent resident in UK. Okay, so he is someone who is in the foreign country. Okay, this travel agent is working in foreign country. He is giving his services in the foreign country. Probably this travel agent has never come to India. He has never traveled to, but you have a transaction with that particular travel agent. Okay, so these services which this travel agent is giving outside India is not accruing or arising in India in the hands of the travel agent. At the same time, the money was remitted. That means travel agent was not paid in India also. That means from travel agent point of view, neither it was received in India nor it was accrued in India. And therefore, it is not taxable in India. And since it is not taxable in India, the tax is not deductible in India. And therefore, you have not deducted. So nothing wrong you have done. And therefore, you require no adjustments whatsoever. You require no adjustment. Reason being that on this particular money, there was no tax that was required to be deducted because the income of the travel agent is not accruing or arising in India. Okay. The next point. So you require no adjustments. Point number 3. Okay. Next, point number 4. Amount of 40,000 each paid in cash to supplier for vegetable, milk product, etc. because of suspension of banking operation due to strike of bank employees. Now see, this is already paid in cash. Aggregate payment per day to one person. That clearly not printed in the question, but that we should always assume and keep it in our back memory if you want to disallow. However, there is one rule 6DD. Okay. Now this rule 6DD always gives some exceptions to those cash transactions. And I think that particular rule 6DD, I've already given it to you also. See rule 6DD. Okay. That where the monies exceed 10,000 and these are all exceptions. Okay. So no need to go and mug up these particular extensions. There are all the type of transactions, okay? And one of the transaction is this, where you will not have any disallowance, where payment was made on a day when the bank was closed, either on account of holiday or a strike. So this is basically one type of an exception for the cash transaction. Rule 60D is basically list of transactions which come in the exception for the cash transactions. Okay. So this is only due to strike. So I will say that this is normally was to be disallowed, but because of Rule 60D, I will not disallow this particular 40,000. Okay. Next one, amount of rupees 5 lakhs. Amount of rupees 5 lakhs was written off in the financial year 12-13, irrecoverable from travel agent. Amount of rupees 2 lakhs out of it recovered on March 31st and credited to the reserve account. So you have credited to the reserve account. Now, the recovery of any loss is a deemed income, section 41, no doubt about that. So it should be treated as income, no doubt about that. However, you have credited this money to the reserve account, that means you have not passed this particular money to P&L. So therefore, I will say that add 2 lakhs rupees to the computation of the income, because it is a taxable income. Now, business income computation over. Section 40B, nothing to do. Interest remuneration, forget it, because no such data is there in the question.